How's it guys? Welcome back to FX Rhapsody. Today we are going to be looking at two currency pairs. It's going to be the Euro USD dollar and then the USD dollar Japanese yen. Before we hit the charts, just go visit my website. It's on the bottom left corner over here. I've put the link in the description as well, where you can find some previous trading material, trading analysis, some very cool strategies that you can follow. And also for those of you that's new into trading, you can go visit my website. There's some nice categories there that get you started in your trading career, and where I explain most of the trading concepts and all that. You can also, with our analysis, we're looking at the COT reports, and you can download the COT reports for free on my website under the resource tab. Also look at the preferred brokers. These guys are absolutely brilliant when it comes to having a reliable broker on your side when you do your trading. Okay, so let us hit the charts. We're starting off on the Euro USD dollar. We're going to be looking at the daily time frame and then moving down to the 1 hour. Now on a daily time frame, a couple of things that's happening in the euro. So I'm just zooming out a little bit. So we're going to draw this little trend line over here again. We've been looking at this trend line for quite a while now. So you can see multiple touches, okay, on this trend line being respected. And now we see that this trend line eventually got broken. Okay, so will this be sign of continuation upwards? Okay, the turn in the market that we're looking for, or will this be just a fake out and market just carry on to the downside? Only time will tell. And we will also have to look at the lower time frames just to have a confirmation, because what we're seeing is we're still looking at all this liquidity that's lying up here, and then some more liquidity that's lying up here. So I would like to see all that liquidity being tapped out, and then we can confirm continuation upwards. Also, just going to take this out. Also, you know, I think we did look at this before. We have got a nice little setup where price retraced all the way to the 62 between the 79% area. So that retracement happened. Just going to highlight this again. Okay, pull your Fibonacci from your swing low to your swing high, retracing back, and we can see continuation upwards. Okay, so the signs are there, but again, only time will tell what the market will give us. Going down to the 4-hour time frame, very interesting on this. Just want to show you something. So we have got, and I think I did do this on our previous analysis, and we just looked at it now, where we had a nice little swing low, swing high retracement to the 62% area. So where does price retrace, or where does price turn, and why did price turn up here? Okay, so if you look to your left, and I always say, guys, always look to the left of the charts. We do see, okay, over here, this was in September, we do see a fair value gap that's formed. Okay, right there. You could have traded that fair value gap where price retraced into it. But my thing is always, when it comes to these imbalances in the market, I always want to see price retracing halfway to it. So what I do is I just take my Fibonacci out. I just get the measurement of, you know, half of that area. So I'm just going to do a solid line through. So as you can see, that's 50%. Taking this out. So we all agree that this is the halfway mark of this block, of this imbalance in the market, of this fair value gap. Price has not returned to that area yet. But if we go back to where price turned, look at that. Bam. You see. So we always have price retracing to a fair value gap in the market. And I always say, let us wait until price retraces to the halfway mark. So if that was your fair value gap, you had it, moved it to the side. Let's say you were in a long position over here, okay, with that Fibonacci that I just pulled, that would have been your exit point right over there. So brilliant how price always returns to those areas. Okay, I'm just going to take this out. Now we're going to move to the 1 hour time frame, and let's have a look at what happened this week. For those of you that missed my video in the beginning of the week, I'm just going to do a little bit of recap. So after every you know, after every analysis on a currency pair, I highlight 2 areas in the market, and we had a high and a low, okay, that we were focusing on. And as we can see, price, there was a couple of entries. Just a quick one. First one was this, okay, with price retraced to the 62%. Like I said, I did make a video of this before and during the beginning of the week. And then we had another entry that happened over here. It was right about there. Hang on. Over there. Okay. And that was our second entry. Price moving upwards. So now we have price that tapped that fair value gap, that halfway line. And now after that area got tapped, and after you've taken your profit, now you can look for a little bit of sell, because you need a price is going to start moving downwards. And where's that sell opportunity? Sell opportunity comes with a nice little swing high where price tapped, swing low. Okay, let's have a look here. Swing high, price went down, swing low, price retraced all the way to the 62%. Guys, this is not rocket science. This is easy stuff. Okay, simplifying it every single time. That's your nice little sell entry, and again, price moving nicely downwards. So, I mean, so many pips that could have been caught this week on this currency pair. So let's just recap a little bit. You know, let's say you took the long entry or the late entry. That's already over 200 pips, 240 pips that you could have caught up, and then downwards, okay, currently another 144. So 300 pips, or close to 300 pips that you could have caught, or 400 pips almost, that you could have caught on this currency pair alone, right? So currently what we're seeing is, we're looking at 2 areas in the market again. I'm going to be focusing on this. Okay, that's the area I'm going to be focusing on for this coming week. Just doing that. And I'm just doing a little bit of mirror copy. And there, small little area in the market. Price just hovering in between this, wanting to range again, consolidate. So I'm going to see what price does when it breaks out, either to the top or to the bottom of that. Let's go look at our COT reports. We're looking at the euro, the euro dollar. We can see a lot of longs being opened in the market, shorts being closed. Okay, so that net position went from a 48,000 to 74 or 75,000 net position, meaning we're looking at price to maybe increase a little bit. So is that confirmation, more confirmation of price going higher up, as we saw on the daily time frame? So let's just have a look at that, and let's see what happens in this area this week, and maybe we see continuation upwards. Next currency pair we're going to be looking at will be your USD dollar, Japanese yen. We're going to be focusing on, or we're going to start off on the daily time frame. Yeah, so on the daily time frame, this currency pair, again, you know, we talked about this a lot. There's not a lot of signs yet, or not a lot of talk in the market about this currency pair, you know, selling off anytime soon. So we will see that continuation upwards. You know, we've got a very weak yen at the moment. So as you can see, structure being broken, price going up, coming down, you know, just retesting that area again, and you can see that momentum wanting to carry on upwards. Okay, so that is what we're seeing on the daily time frame. On a 4-hour, just want to zoom in a little bit. Okay, 4-hour time frame. Excuse me. With that retracement down, we first had a low that was formed over here. Then we came down, price came down, just tapping into that liquidity, because there's a lot of times when this big low formed and then price moving up, there's a lot of buys happening over here. So lots of liquidity lying below this area. And as you can see, price just coming in, touching or tapping into that liquidity over here. And then price started moving upwards again. Okay, with this move upwards, there was a fair value gap that was formed. So as you can see, price just hitting that fair value gap area in the market. Yes, there is, it looks like on the 4-hour time frame it wants to sell off again, but I mean, price can just easily go upwards. So we will definitely have a look at that on the lower time frames. We need confirmation. Okay, we can't just go into a buy and a sell. Always have confirmation on your lower time frames to where price is going. All right, on a 1-hour time frame, what we can see is 2 areas in the market that was mapped out last week. We do see this fair value gap in the market formed. Okay, right there. Okay, that's the area that we're focusing on. Again, just zooming in a little bit so I can show you. So you have your top of your fair value gap, your imbalance, and the bottom of the fair value gap. And then I'm just going to do this. We have your halfway line over there, and look at that. Okay, price just tapping that halfway mark. That is always a good area to enter when you see price retracing into a fair value gap. Always remember to have that halfway mark. It's not always that it comes back onto that line or onto the halfway mark, but most of the times it does. It just makes your risk a little bit lower. Okay, so that there you can see price going into that area, just selling off again after that liquidity. Remember, we talked about that liquidity that was tapped, and we have that liquidity area right about here that was marked out. You see that? Okay, so you have that area being marked out, price going below that area, and then started moving up. So what happens is you have a retracement. You have a low and you have a high. Okay, swing low, swing high, price retracing to the 62% area. It's as simple as that. Look at that. That is where you place your buy. Price going up again, forming another swing low. So let's say, I'm just going to leave that little blue. So let's say you missed that first entry. Again, price going up and retracing. Okay, so it formed a retracement, and that's going to be your next low. Then you're looking at a high, retracement, 62% once again. Okay, guys, it's as simple as that. Right, easy way to make your pips. Downwards, that's over almost 300 pips. So let's say you placed your sell, or you were selling off, and you're selling off that area where it touched that fair value gap, and your exit was just below that, or just on that previous low. Okay, so you know the price is coming to tap liquidity. That's almost 300 pips you could have caught. And again, you know, with this nice retracement, let's say you hit the first one, the first entry, you would have been another almost 200 pips up. So guys, this is, like I said again, simplifying your forex trading. Two methods: Fibonacci, fair value gap. That's all it does. Okay, it is all it is. Practice those things. I'm making videos about this every single week. Do not overcomplicate your trading. Keep it as simple as possible. We have these two areas in the market that we are going to be focusing on. It's a high, it's a low. We want to see price breaking above it or below it to see some continuation. Let's have a look at the COT reports again. We're looking at the Japanese yen. So the Japanese yen, again, weakening as we see. So longs being open in the market, but a lot more shorts. So you're seeing that net position pushing deeper into the negative. And that is why we will see a continuation upwards, because if the Japanese yen weakens against the US dollar, that means the US dollar is stronger, so the US dollar will push the price up. So that's all from my side today, guys. I hope you enjoyed this analysis, and if you did, don't forget to hit that like button. Show me some love by hitting that super thanks. Subscribe to my channel, hit the notification bell. There's definitely more video content coming your way. So guys, I hope you have been having a wonderful weekend. Stay safe and happy trading, guys.